Hello guys, good morning to you all. It's your boy NORTHFX. Today I'm looking to break this trade down for you guys. Actually, I'm not in the trade yet. I just want to take you guys through the thought process that I have for this trade. I think this is a very high probability trade. In my opinion, I've not actually taken so much trade this week. You know, I think Yeah, I took a few losses though, I took a few losses and a few wins. And yeah, can remember, at this point, I took a buy at this point and then got stop loss hit at this point, and then we went long at this point. Just a few trades that I've taken this week, overall you know, couldn't be more grateful. But today I'm going to break this thing down for you guys. I'm going to take you guys through the thought process on how, I analyze the market, and, make daily profits, consistently, and how that would help you as well to, level up your game and, maybe you could, pick one or two things from the from from my insights and from what I shared today. Hopefully you will. So let's get straight into it. First of all, I would like to show you guys how I look at my trend. Now going straight into it, if we go on the 4 hour, right, we'll see that price has actually, price is actually playing at an all-time high, right? So price is actually currently, currently made a new all-time high, which is gold. Gold, which is what we are trading. Yeah, if you look here, you would see gold spots. This is gold, so we are trading gold. Gold is my favorite, peer favorite commodity to trade. So if we look at it, we can see this market has actually been banging. It has actually been, going to the upside over and over and over again. You can see, how price has consistently been up. Actually, this is not actually going to continue. At some point, we are going to see the market retrace and, come down. But are we supposed to be predicting that right now? Absolutely not. What we are supposed to be doing is actually flowing with the market, doing what the market is doing at the time, in the moment, you know. And when we look at it right now, what is the market doing? Market is creating higher highs and higher lows. It's creating higher highs and higher lows. You see, it's creating higher highs and what higher lows. And if you are familiar with the if you are familiar with sometimes in the forex market, you see when the market is creating higher highs, it means market is going up, and when the market is creating lower highs and lower lows, it means the market is going down. So quickly to take you guys briefly into it is, when market creates when the market moves up and then pulls back and then moves up again, taking out the previous high, that's called an uptrending market, right? So why is it uptrending? Because it's going up. It's actually made a pullback here, but then it's created a new high. And what we now look at is, okay, the market pulls back again. We want to engage because we think, okay, this is a range that has been formed, and the market could continue to obey and follow this range to continue pushing up. So this is what we call an uptrending market. And if you look at this and this, I think it's self-explanatory. You can see this is actually, what the market is doing. The market is going upwards. So what do we want to do? We want to buy this market. That's what we want to do. If the market is going up, you flow with the market. You don't go against it, you flow with it. At some point, the market gets to retrace, which means the market, these are called retracements. These are what we call retracements. These are what we call retracement. These small pullbacks, these are what we call retracement. So at some point the market retraces, but then it goes up again, following the previous, following and obeying previous lower highs, and then higher lows, and then making new higher highs. So right now, what I'm looking at, right? First of all, the first thing I look at is to see the trend. What the market is actually doing. Is the market going up or is the market going down? But clearly, you can see right now that for this market, it's actually going up. So what I want to do is I don't trade on the higher time frames. I usually actually I analyze from the higher time frames down to the lower time frames. So what I do when I've deduced and looked at that is, okay, I look at the current range that we are in. What range are we in? Are we in a bullish range or are we in a bearish range? Right. So we can see when price actually broke this low right here, we switch from being in a bullish range to a bearish range, because this is what we call a bullish range. This is a bullish range, right? So a bullish range typically means a complete bullish structure. That's what we call a bullish range. So if we look at it right now, we can see this is a higher high, a higher low, and a higher high, right? So this is a bullish range in my own view. This is a bullish range. So since the previous high has been taken and the new high is created, I that actually to me qualifies to be a bullish range. So after making that range, I look at price pulling back. So after price has made a bullish range like this, I want to see price pull back. I want to see a pullback, and then I want to see price obeying a demand zone, or if we sell in a supply zone. But in this case, since we're buying, I want to see price respecting uh, demand zone, right? A demand zone. So we can now see price move up and create a new higher high. So that's what I'm looking at. So right now we can see after price switched bearish here, we can see that price actually pulled back. If we go on the 15 minutes right here, we can see that after price, get this off. So yeah, so after price pulled down, after price broke this low, and formed this bearish range, which is typically from being bullish to being bearish, breaking a low and forming a lower low. This is a sign that price wants to sell, right? This is a sign that price wants to sell, and then we see a pullback, and then we see another low created, something like this, and then maybe we switch bullish, and then we start moving up, right? So after price formed this low, right, we actually wait for a pullback. You wait for a pullback to occur, and then once you get a pullback, you can see this bullish, this white candle. Those are the pullbacks, and then we can see a new low has been formed, and then we got another pullback, and then a new low was formed. Then what did price do? Price pushed up, forming a high, forming an higher high, which is this structure you can see right here, which is this structure that I just drew, you can see. So we formed an higher high, and then we formed a mini lower high here, which the market actually took out and then switched bearish. We can see this low been taken, right? So this is a bearish range, right? This is a bearish range, right? And then we can see from here, we can see a little bullish range formed. You can see after this low was taken right here, you can see a little pullback and then a sweep, from yesterday's CPI release, CPI news release. You can see a sweep below this low and then a push up, right? So and then immediately I do this point of interest. How? Because I saw the way these candles were playing. I kind of knew that this was going to might hold. Because you're never actually certain about anything in the market. So this might hold, and then it held, and then we pushed up, and then we played out when market opened right here. You can now see we pushed up. For me right now, I'm trying to see ahead of what I've actually seen over and over again, because when you practice structure, and when you've done your due diligence, when you've done your back testing and all, you're able to actually these patterns happen over and over again. You're able to actually foresee a pattern before it happens. Right now, what I actually think, what I actually see right now is I see price taking this high out. I see price taking this high out, right? Because this bullish range that had this bullish internal range that has been formed right now, I see this high going, and if this high goes, right, this high is what actually going to stop this high from being taken. But once this high is taken, I see this high going, right? So what I actually want to see right now is, since this bullish range has been formed, I want to follow this bullish range. I want to follow this bullish range to take out this high and then this high, right? So generally, right, my risk to reward is at minimum 3 hours. So if I'm risking one, I want to get three. So if I'm risking $10, I want to get $30. If I'm risking $100, I want to get $300. If I'm risking $300, I want to get $900, right? So that's typically my lowest risk to reward, right? So my trade has to be 3 times what I'm risking before I actually take a trade. That's one of my rules. And 3 times or more. So if the trade is 2 hour, I possibly might not take it, but if it's an A+ setup, I might take it, just to feel like I followed my rules. So right now, what I actually want to see is, I want to see a pullback into this range. I want to see a pullback into this range. And why I actually choose this demand zone, right? Why I actually choose this demand zone to be my range is because of the fact that, let me show you guys something here. You can see we have a flip zone right here. A flip zone is, when a supply flips to a demand, or when a demand flips to a supply. So a supply is mainly where you sell, a demand is where you buy. So that's the definition of a supply and a demand. As a supply is a point where you sell. A supply is where people are selling. That's it's an area where people are selling, and then demand is an area where people are buying. So that's the simplest way I can put it right now. So you can see this is actually an high that was created in the market, right? This is actually an high that was created in the market. And if you look at it, if you look backwards, you can see that this high was actually respecting a supply zone. You can see when this bullish candle was formed, it actually came and tapped into this right here, this zone right here. This one right here, you can see price actually tapped into this and then pulled back, which shows that there were actually supply right here. There were sellers right here, right? Then price taps it and then pulls back, pulls back into this demand right here, and then price started to grind up. It was grinding up. You can see it didn't actually go straight up. It was grinding up because it was fighting between supply and demand, right? And then if you look at it, it was fighting between supply and demand. That's why it was actually grinding up, because there was sellers at this point and then buyers at this point. So, why does market move up? Market move up because there is not enough sellers, right? If there were enough sellers in the market, then the market would be coming down. But if there are not enough sellers and buyers are more than the sellers, which means if there is more demand than supply, then price generally moves up. But if there is more supply than demand, then price generally moves down, right? So this is the logic right here. So when price pulled down, price started to grind up, right? Price started to grind up. When market opened, price moved up into this zone. Let me take you guys to see this, because this is actually very, 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 very important. This could help you, level up your game. So I want you to listen to this, pay attention right here. So when price actually formed this high, you can see when these bullish candles were formed, right, you can see the bullish candle didn't actually just go take out this high. It's pulled back. It's pulled back. So this was the transaction that happened here. The transaction from sellers to buyers. This is what we call a flip zone. This zone right here is what we call a flip zone. Right? This zone right here is what we call a flip zone. So price taps into this, right? Pulls back, you know, pulls back and then takes the zone out. And if you look at it, right, we had a pullback. We had a pullback from this candle. You can see this wick right here. We had it, but then it never tapped into this. it's never tapped into this area. But maybe if you go to the lower time frames, maybe on the 5 minutes or on the 1 minute, you see it starts back. But on the 15 minutes, this is actually a clear zone. It hasn't been tapped, right? And that is why this area is actually the area I want to take a buy from. But I don't want to put my stop loss below here because you can see another zone right here that actually happened the same way. So it's possible the price might tap here and then takes this low out and then taps here and then moves up. So that's why I have my stop loss all the way down here, right? But regardless of how big my stop loss is, my risk to reward is 3R. If you look at it right here, you can see 3R, 3.01. So if I'm risking one, I'm getting 3.01 in return, right? If this trade plays out the way I want, because it's a game of probability, but game of probability added with logic, so that is why I actually want to buy this market right now. So I don't know any minute the market could get here, but I'll try. I'm going to release this video right now, so any of you who sees this might be able to take advantage. I just decided to bring back my YouTube. If you're not subscribed, please like, subscribe, turn on the notification bell, because right now, any trade I take, I'm going to make sure I document it and, post it on my YouTube, post it on this channel, and, to give you guys these insights. And I might probably, buy a new challenge account and, trade that live with you guys, get that passed, and show you guys the process on how I actually go about funding accounts and all that. Since my last experience with my funded with what's it called, my forex book, my forex funds, which actually denied my payout because of their issues at the time, which actually made the company go down. But it's all good. That's actually in the past now. But yeah, yeah. So this is it, and I wish you guys a great weekend. Wish you guys have a great weekend ahead, and do not give up. You might be going through a hard time right now, but don't give up. Don't give up. This is actually a great hustle to be in. This is actually what's the work. It's what's the headache when you make it. It's actually worth it. So don't give up and keep pushing, and keep learning, and keep back testing, uh keep being disciplined, keep on doing the things that would actually level up your game, being disciplined, being patient, being consistent, and being focused. Just make sure, because when you actually start showing those qualities in the market, it's reflecting your life as well. When you discipline with the market, you become disciplined yourself. When you focused, you become focused yourself, so you get to have those a clear mind to actually go after things you want to go after, to actually do things you want to do. But yeah, so this is it. Gold by before, right? We'll see the after. However it plays out, if we take a loss on this trade, I'm still going to roll out another video for you guys to see, if there is actually any mistake we made, or if there are things we didn't actually take in account, then we would learn from that. But yeah, this is going to be that will be all, and I will see you guys in the next video. Let's get it.